Well, hello and welcome to Good Deeds Real Estate with a Mission. I'm Diane Davidson with the Fine Homes Group at Keller Williams. I'm here with Bill Weidecker. I'm trying really hard not to gaze into his eyes, so it looks like I'm looking at all of you. So therefore, it's hard to resist. Anyway, Bill, hi, I know you're there, and so we're here with some news. Some really great hacks. I want to do food hacks, but I was told we have to restrain ourselves and just do real estate. So today we want to talk to you about some mortgage hacks, a couple for people who already own their property, and then a few for buyers in the marketplace. And I want to tell you, and I'll repeat it at the end, that if you're interested in a complete, a booklet that we have information on all the mortgage hacks for current homeowners, please email me at ddavidson@kw.com and just put in the subject line mortgage hacks and we'll get that to you. Okay, here we go, Bill. Take us into the mortgage hacks for current homeowners, please.
Well, we're just given a couple today. So
Yes.
One is, what if you just made one extra payment a year?
Mm-hmm.
Here's the really cool thing that not a lot of people think about. Think, well, I could swing an extra payment a year. And if you did that, you'd cut a 30-year mortgage down to 24 years. That's a huge number. So to give you an example, Di, if you're paying $3,000 a month and you cut 6 years off, that is, essentially it's 70. You're making an extra $72,000 in payments, one a year for 24 years, and you're cutting $216,000 in payments out in those remaining 6. That's a net savings of $144,000 by making one extra payment a year. So that's a huge hack if you've already got a mortgage. And don't worry about how deep you are into your mortgage at this point. Make one extra payment a year and you will see a significant drop off over time. And not a lot of sacrifice, I wouldn't think. And
then largely because you're paying so much interest, right? So even if you're not planning on keeping the loan for 24 years, when you go to sell or refinance, when you pay it off, however you're paying it off, you will have a much lower payoff figure. So you don't have to wait for all that. You don't have to wait for that benefit. That benefit starts accruing immediately. So that's a great hack. And as Bill said, there is a booklet. We went to this great conference and there's a booklet of hacks that I can't believe at least you'll be choosing which one is the smartest. So anyway,
ddavidson@kw.com to get many more hacks than just the 2 we're going to give you today.
Okay. And the second one, which quite frankly, we need to look into for ourselves. So that's on Tuesday's to-do list. Is all about PMI, private mortgage insurance. You want to explain that, Bill?
Well, if you're putting less than 20% down when you originally take out your mortgage, you're making a contribution more than likely towards private mortgage insurance, which after you hit 80% equity, you are, and essentially after you've got not 80%, 20% equity, after you hit that number, you no longer have to pay private mortgage insurance. And yet lots and lots of buyers think, well, I only took the mortgage out a couple of years ago. So I'm sure, well, guess what? Just in the last couple of years, the rate of appreciation in market value is so much that more than likely, you no longer have to pay PMI or private mortgage insurance. You just got to request this of the lender. They send an appraiser. And if you need help there, by the way, if you're going to do this, engage us. We will talk to the appraiser. You mentioned even meeting the appraiser there on behalf of clients.
Yeah, so there are hacks within the hack for this. And so basically, first of all, if you want us to come take a look at your property to give you a sense, it's very unlikely that if you've bought in the last few years that you don't have at least 20% equity. So, but we'll come take a look at it, give you a sense of what we think it's worth. And then when you do ask your lender for an appraisal to eliminate the mortgage insurance, we're happy to be there because we can kind of pepper the meeting with things that we know from being in the marketplace that you may not. And also sometimes you can get cornered and you can ask questions that might be awkward to answer. So better if but I mean, no charge. We'd just be happy to be there for you and help you out. But it's, as I said, if you bought in the last few years, it's highly unlikely that you wouldn't be able to get rid of your private mortgage insurance. And if you have bought longer ago, certainly, and if it's more recent and you've made improvements, especially if they're documented, that's again very likely. So please don't be afraid to be in touch.
Let's talk about for those that haven't yet found a house they're buying. You have a couple of hacks we want to share there. One is right now there are lending institutions out there, more than a few, that are allowing what we call a lock and shop feature, which in other words, you can lock your mortgage rate in and shop in some cases up to 120 days to find a property and then close on it after that. So that's kind of a neat option that's out there by a lot of lending institutions. People think, well, I can see a good rate. What do I do if I don't have a house? Well, there's some that are offering these lock and shop features, which is really kind of fantastic.
And I think with most of them that whatever you lock at, if the rate goes down during that time, you're able to get that lower rate. So, rates aren't as high as they were. So that's why, a lot of people are back in the market now or in the market for the first time. But as long as we're on rates, I want to say something about that. There's this expression that I've never really liked with, in the real estate industry, that you date the rate and marry the home. And honestly, it's kind of irresponsible in our industry to share that, because it's really not about the rate. You could have a really, really, really low rate, but if it's amortized over 5 or 10 or 15 years, you're going to hate the payment, right? So it's really about the payment. And that kind of brings us into the next hack, which is when we've been talking about it for months and months and months, really. And it's getting more and more popular with such trendsetters, but all sorts of buy downs. And in this, what we will call buyer-friendly market, where terms are often more negotiable than they were, still a seller's market as far as inventory. So please let us know if you'd like to list your home. But in a buyer-friendly market, because sellers are often willing to participate with some money back toward closing costs and so forth, so that money can be allocated toward all different kinds of buy downs. And so that's definitely something to speak to us about or your lender. And there are also adjustable rate mortgages that are much safer and clearer than adjustable rate mortgages, ARMs, as they call them, used to be. So I still think those are the great hacks. But the lock and shop, sorry, I always want to shop first. The lock and shop it can be a great way to go. And there hasn't been much talk about that recently, but it's something you should ask your lender about. And you might be able to do that in conjunction with some other programs, some sort of buy down. So those are the 2 hacks for buyers now and 2 hacks for people who are already homeowners. Again, if you'd like information on all the different hacks, including, I won't give another, never mind, ddavidson@kw.com. And again, if you'd like us to help with I want to
jump in, but I don't want you to cut us off.
I was not going to end it.
Okay, good. Here's very simply, I just want to say this. There's a difference between being in partnership with lending institutions out there and being in passengership. And the difference is oftentimes you're just handing someone off to there are real estate professionals that say, well, I don't get involved in that because I'm just going to hand them off to somebody. That's a passengership. I'm just along for the ride. The partnership is where we really work with lenders to try to figure out cool ways to save you money, whether you're already in the house that we helped you find, or you're looking for a house that we're helping you find, right, Di? I mean, it's the difference between really taking an active role versus a passive role.
Yeah, we pride ourselves in knowing a fair amount and valuable information about every facet of our business. And I think that's really how it should be. Can I do one food hack?
And then we got to go.
Okay. So at Trader Joe's, their little cauliflower pizza crust, they're in next to the produce section. They have no starch in them at all. And their light mozzarella cheese is the lowest in fat. And they have a great pizza sauce. And if you want to put some pepperoni on, you got to go to another store and get the Applewood turkey pepperoni. The whole little personal pizza is probably 350 calories, really healthy. We've been living on them. And if you want more information about that, same email, just food hack. Okay. Be sure to follow us on your favorite podcast platform or subscribe to our YouTube channel. See you next time.
Easy for you to